All right. Good afternoon, everybody. Thanks for joining us today. We are going to be talking about customer deposits today. I know I put this under the job costing category because people think about construction, they think about down payments, they think about, I'm in the trades industry, I do HVAC installation or maybe servicing, and so I'm going to take a down payment from a customer on the work we're about to do. So I put it under job costing, but it's not always job costing. We have a lot of clients that have customers put down deposits in the manufacturing industry, as an example, especially in custom build, right? So build to stock type of things. We've got clients who do custom trailers, and the clients that do furniture, even though it's not custom, but still furniture because they don't build until the order is placed. We have people who do custom car seat covers. So just off the top of my head, jewelry, custom jewelry. So you can see where the deposits can come into play even around inventory. So it's not just construction, basically, right? Not just construction. So anyway, so we're going to talk about some of these things today. I'm Marjorie Adams. I'm the CEO of Fourlane. I love doing these trainings every week. Please definitely let us know if you have any questions. Pop it in there. If I can't get to your questions, I will get to them after our meeting. We'll reply to you after today. If you have any ideas for trainings of things that you guys want to see, please let me know as well. So let's go ahead and get started. I always like to, I always like to remind everybody, we do have a YouTube channel. youtube.com/Fourlane. If I go too fast today, you want to go back and watch it in a slower pace or pause it while you do these things live in your file, you can do that on our YouTube channel. Our videos are usually up the next day. Also, we have a Fourlane QuickBooks Enterprise Facebook group. Every time I mention this, about 4 or 5 people join into the Facebook group and start asking questions. So it's just a resource. Good to know. And then we have had a lot of clients asking us lately. They're getting super annoyed with Intuit support. We do have on-demand support here at Fourlane. So, when you have an IT company, you don't call Microsoft, you call your IT person. So we are basically your IT person for QuickBooks. Also, what's really great about this and where people take advantage is a lot of times one person in an organization becomes like the IT person for QuickBooks. So it's the CFO, the accounting manager, something like that, the office manager, and everybody goes to them. Well, you can free up some of that person's time and send them to us instead. So anyway, just wanted to make sure y'all are aware. Okay, I'm not going to be spending a lot of time in our slide deck today, but I always like to leave these up so you guys can see what we're going to be talking about. So first, we're going to be talking about customer deposits, obviously. But the biggest thing that I want to make sure that we touch on is there's 2 different ways to do this. So one is we have a negative accounts receivable. Okay, so that's one way to do it. So we'll look at what that looks like. The other way, which is the correct accounting way, let's be clear, is an other current liability. Okay, so that's how they come in. Because really, if I take a down payment, let's say we're doing a remodel on my kitchen. If I make a down payment to the remodeler who's doing my kitchen, and they never start work, they technically owe me that money back, right? Now, they haven't started work yet, so they shouldn't, unless they're cash basis, they shouldn't be recognizing that revenue on their P&L at the point that they're receiving the cash. So where's it going to go? It's either going to go in as, right, it's cash in, so a debit to cash, and a credit to either accounts receivable, which would be a negative AR, or a credit to a current liability account, which would be a positive in the AP section, right, or in the current liability section. Okay, let's take a look in product what this looks like. I also wanted to, just before I go ahead, I put these little screenshots in here. It's really hard to show this stuff in demos or in webinars because it's linked to an actual, right? This is an actual merchant service account. So if you guys haven't seen the What's New in 2022, QuickBooks always likes to make it easier for you to get paid, right? If we make it easier for our customers to pay us, then they will pay us faster. QuickBooks also likes to make it where your customers do the data entry for you if possible. And so this new concept of payment links came out. If you have a merchant service account, you can do this. And what the payment link is you can send without creating a transaction even. You don't have that estimate. You don't have to have anything in the system. Without creating a transaction, you can send a link to the customer. You go in there, you say, hey, I want to bill this customer $100. What's it for? You just put in some words in there, right? It doesn't have to be tied to an item, not tied to a transaction. You do choose which customer and which email address you're going to be sending it to, and then you choose if they're allowed to pay you by credit card or bank transfer. Once you do that, it creates a link. You can use that link. You can email it. You can text it. You can, I don't know how other ways you can get it across, but you can give it to the customer. The customer clicks on that link. They put in their own credit card or ACH information. They do the data entry for us, which is awesome because then it's stored online, right? And they have access to next time they make a payment to us. It's stored there in Intuit servers, no PCI compliance issues with us, and they did the data entry for you. And it results in what we're about to look at when we dive in product here, which is a customer payment. So pretty cool stuff. If you haven't seen it, I love this feature. Okay, so let's get in product, where we like to spend the most of our time. I'm going to go through this as if you're doing an estimate. Okay, so I'm going to start with an estimate in here. Now, you don't have to start with an estimate. You can just go and create a payment link, right? So the payment links are here under customers. You click on payment links. You have to make sure your merchant service account is linked to your QuickBooks account. Can't do that in the sample file. And then you just send it out to the customer, right? Excuse me, sorry. So I'm going to start with an estimate just so that we can see the workflow that is possible. Maybe you would do it this way. We're very good at being creative over here at Fourlane, using the system to get to the results we're wanting to get to, right? So let me go into estimates here, and I'm going to create an estimate for kitchen remodel 1. Okay, so just create a new estimate in here. Now, with our estimates in the system, you don't have to create them this way. You can just go straight to deposit. I have a lot of clients that actually sell things, like they will sell a subscription, a SaaS organization that also rents product to their customers. So like cell phones, we have some high-powered cell phones that go out in the middle of the desert, I guess. I don't know that much about the technology of it, but the service is a SaaS service, right? Or it's a subscription service for the usage of the phones, but they also rent the phones out. And so they take a deposit against that rental of phones or against the destruction of phones or whatever it is. So you see it in all different places. So anyway, just keep on going. I don't want people to think, oh, job costing, I'm out because I'm a manufacturing company. It's not the case. We see this all the time. So I'm going to put in here a couple items, right? So excavation and concrete work. I have an estimate of $500. I have, let me put in here 100 times 50 and 200 times 75, and have a markup of 120% on this one. Which would be awesome to have that markup of 75% on that one. Okay. So I saved this estimate, right? It's an estimate. It's just what we're used to seeing. It has nothing. It does do job costing for us. If you watched our previous video around job costing last couple weeks ago. But what it does is it helps us to see what we're going to send out to the customer. Hey, customer, this is how much you owe us, $37,250. So the other thing that we do is we can come in and we can set up an item. So I'm going to go ahead and set up a new item. Now, I like to make these items other charge items when they're deposits. And it's just because, the item type matters. Obviously, if it's an inventory part or an inventory assembly, it matters. You have to choose one of those so that you get the field that allows you to post to the balance sheet when you purchase it. Service items, non-inventory parts, other charge items, they kind of have a very similar feel in the books inside of QuickBooks. It's just that when you are totaling by, right, you can total by item type. And so I like to kind of stick things together. So I put in as an other charge because it's not a non-inventory part and it's not a service charge, right? So that's what I usually choose. Now, I'm usually telling everyone always, when you set up an item in QuickBooks, you always make it double-sided by checking this box. Okay, now this is the one time when I choose not to do that. I'm sorry, I've also seen people set these up as discount items. I also don't like that because it implies to me that it's a discount to the customer, and this is not. This is money that the customer owes us. Like they're not receiving a discount here. So this is the one time when you cannot do this as a double-sided item, and here's why. When I set up a double-sided item, usually I like to do it so that, because on a customer deposit, I should never see it on a purchase type transaction, right? Only on a customer type transaction. So I usually say, come in here, stick it to a place where I will really be able to see if anybody accidentally posts to a customer deposit on a purchase transaction. That's usually my rule of thumb. However, when you make it a double-sided transaction, one of the things it does is it doesn't allow you to put in a percentage in the sales price. And I like to put in a percentage in this because it just helps. Right? Usually we've got sales reps or PMs, doing this information, put this information in here. And I like them to not have to think. So I'm going to call this prepayment. Okay. Or retainer or something, retainer payment, you can call it whatever, customer deposit, whatever it is. But notice, since I don't have it double-sided, it says now I can do an amount or a percentage. So I can come in and put in here 25%. Okay, now the benefit of doing that is that it auto-calculates for us. It's just a default. When I put it on the actual transaction, I may or may not do 25%. Maybe it's a negotiating thing. Now 25% is a standard, but I can go lower. But the fact that I can put in a percentage is helpful. It helps people not have to think about what they're doing. Try to get to the point where our system is telling us what to do versus us having to think about it as much as possible. So then, where am I going to point this towards, right? I'm going to point this prepayment item towards a customer deposit account. That's the right way to set this up. Okay. Now, we're going to be talking about negative AR first. So really, this item is never going to come to fruition. It's never going to show up on an invoice. But I like to have it, even if we're not doing it through customer deposits as a liability, I like to have it so that I can reflect to the customer how much money they owe us as a prepayment. Now, whenever I put in something that has a percentage, it's going to take a percentage of the line above it, right? So this is actually taking a percentage of the line above, which is $26,000. Now, I wanted to take a percentage of both. So what you actually have to do is insert a line, and you have to use a subtotal item. A subtotal item inside the enterprise is a really cool, powerful thing. You can subtotal amount, quantity. You can subtotal other columns, basically. Any other columns that have numbers in them. There's also a multiplier thing, which if you haven't seen that video from us, it's in our YouTube channel, but it's really neat. Like you can say, you can do weight as an example, right? So I could add a field called weight, and it'll take quantity times whatever one unit of weight is and give me it multiplied out. But anyway, I don't want to get away from this too much. So here I put in a subtotal item. Now it totals up to $37,250. So it's taking 25% of the line above it, right? Which tells me what my prepayment is. Again, this is all just for customers to see. You don't have to do all of these steps. I'm just giving you bits and pieces, like this seems like a lot. We're 15 minutes in, we haven't even received a payment yet. But it's just ideas, right? Get your brain jogging to think about what's possible, okay? So I save this estimate, I send it out to the client, and I just say, hey, this is the prepayment, or this is the deposit, or this is whatever we call it, whatever terminology we use. You owe us $93.12.50 in order for us to get you on the schedule. Okay. Now, when we use a prepayment link, or when we are doing the negative AR, usually that is when the timing of the prepayment to the application, or when we're going to actually get the work done, is in a pretty short time frame. Okay, so the negative accounts receivable to me is usually okay when it's a couple days or within a week. If it's outside of that time period, then we might have some issues around timing, right? So we'll look at what that means. So if I came in here and sent a payment link, or if the client just called in and said, hey, I'm ready to make the payment for that $93.12.50, the result would be, if we're doing negative AR, a received payment transaction. Okay, so I'm coming in here and saying I'm receiving a payment against Kitchen 1. Now, normally when we receive a payment, we have a transaction down here. But so far, we don't have any posted transactions. We don't have any invoices for this customer. So instead, I have to take $93.12.50 and pull it onto this payment. Here's the date. Here's the, I can take a credit card payment over the phone, ACH over the phone if I have that set up, or I can get a check. So notice that once I put in that amount down here, it says, hey, you are doing an overpayment. What would you like to do with this? You can leave the credit to be used later, which is what we want to choose to do, or you can refund the amount to the customer, which is not what we want to do because they're paying us. Why would we pay them right back? All right. So I say save on this. Now let me change the date. It's otherwise I'll keep getting these pop-ups. Okay, so now on that transaction, what happens behind the scenes, right? So we can always go to reports and down to transaction journal and see what's happening behind the scenes. So it's hitting undeposited funds, cash, right? Whatever, if we go through undeposited funds, and it's hitting accounts receivable as a credit, which is a negative accounts receivable. If I go look at my AR aging summary report, I have a negative $931,250 on here. Okay, so it takes away from. If I go look at my balance sheet, hopefully, my balance sheet, $41,125, should tie to my AR aging, which includes that negative amount. So we have some clients who receive final payment at the point of invoicing. Right, so when they invoice the customer from the estimate, they invoice for 100%, they receive final payment at that point as well. And so the only thing sitting in their balance sheet or in their AR is actually negative amounts. Their entire AR is negative. And that's okay. As long as when you send your books to your CPA, the CPA understands for tax adjustments they need to adjust out of AR, and they'll put it into a current liability for tax purposes. But this way is very simple. It doesn't take a lot of extra steps. There's no extra reconciliation to do. So a lot of people do choose to do it this way. So once I have that in here, let's go back to our estimate. Okay, we're going to finish out our job, and I'm just going to create an invoice for 100%. Okay. Now, when I create this invoice for 100%, I'm going to remove that prepayment line. And when I say save, notice it pops up a box. I know we get super annoyed by all these pop-ups, but we should pay attention to them every once in a while. When I save, this customer has available credits. Would you like to apply them to this invoice? And I can say yes. And then it pops up, and there's that payment for me sitting, waiting to apply to the payment. Now, I see this a lot of times, too, in web stores. We'll see people, the payments come in from the web store, right? And they sit in there as a negative AR. until we take the sales order and mark it as an invoice. So I've seen that tons of times too. Lots of workflow that way, because there is a time difference, right? Customer pays me today for an order, but I don't ship it until 2 days later. There's a time difference there. So when I say save here, notice you can see down below, $37,250 is what they owe me. Payments applied, $9,312. So this is the balance due. And then we can send that out to the customer, or we can take payment, or whatever it is right now. So that's negative AR. That's running through negative AR, customer deposit. The other way to do this is to run it as a current liability. Now, the current liability is the most effective way, is the proper accounting way, not the most effective, is the proper accounting way, because you really shouldn't have it. The only thing that would be a negative AR that should be on your books is like, bad debt, a contra bad debt account, allowance for bad debt, right? That's the only thing that should be showing up as a negative in the AR world. Otherwise, it should be positive. So what does this look like? Let's go ahead and create an estimate. Let me get to that estimate again. I'm going to create a copy of it. I'm going to change up the amounts here, just so that way it really stands out as a different amount, okay? Now, you can do multiple prepayments if you want to on here. You can do several. Like I could do prepayment 1, 2, 3, 4, 5. I've seen people do it that way. And then you put in here the dates that they're due, right? Prepayment due. So it's just paperwork provided to the client. So once we have the estimate in the system, we save this. There's 2 different ways that I have customers go and get that prepayment. The first way is that they will actually create the invoice, and they'll choose for only selected items. We'll create the invoice for, actually, I don't do it that way. I'm sorry. Create the invoice for 100%, and then when it comes through, we change the amount on the prepayment to positive, right? And then we just delete these other lines. So I'm sending the invoice out to the customer for this $12,600, okay? And that's a little bit easier because it keeps track, right? When it comes across, it tells me $12,600, and then I just have to remove the negative. So I see this a lot of times. Other things that people do is that they will, I don't want to record this transaction yet. Other things that people do is that they will go in and they will create just a sales receipt. So they'll use this estimate, give it to the customer, maybe create a payment link or whatever it is, give it to the customer, and then they will go into sales receipts and say, okay, I have a sales receipt, or I'm going to take your payment over the phone. Where's my remodel? Is that the right one? Which one did I do it to? Why am I lost? Albert Cruz Kitchen Remodel 1. Albert Cruz Kitchen Remodel. Okay, so something's messed up in my customer list. My poor demo files get so abused, right? But that's right, even though it's looking like it's under Heather Campbell. That's really strange. Awesome. I'll have to look at what's going on there. So on this item, I will go in and put in the prepayment, and I'll put it in for the $12,600, process ACH, process the credit card payment. So either way, okay? So either way, somehow I am receiving this money. Once the receipt, sales receipt goes in there, what happens is behind the scenes, it actually hits our, let me go to our balance sheet and look, it is going to hit our customer deposit account that we have set up, right? So in here, I see I have a sales receipt for Albert Cruz for $12,600. So it made my customer deposit credit go up, which is adding to the balance, right? Took it from $27,500 to $4,100 because it credited this amount. Right? Now coming back to the estimate, this is a great way to do this too, because it allows us to allocate the prepayment against a portion of the estimate. So let's say I come in here and I create my invoice, and I'm going to create my invoice for 40% of the estimate. Okay, so everything's 40%. Now notice when it does it 40%, it also picks up 40% of that prepayment. So it pulls 40% of the prepayment out. Let's say this is at the end of the month for 12/31. Pulls out 40% of that prepayment out, and the rest is going to be sitting in the balance sheet. Okay. So when I go in, this is a report that we should run, so pay attention to this one. All balance sheet items, if you do not have a subledger documentation for your balance sheet, you need to get it, right? We need to create it for you. We need to help you to create it. On accounts like customer deposits, this is not a bank account. It's not a MasterCard account where we get a statement, or a bank account where we get a statement, right? It is just an account that we have where we're looking for something to come into this account, sit there for a little bit, and then get removed. So anything like that, we should be reconciling to 0 every month. And then we should use this report, which would be a custom transaction detail report, as substantiation for what that balance is. So I'm going to run this report for all time. So I want everything. I want a total by customer, and that'll total by job for me as well. And then I'm going to filter for my customer deposit account. Now, if I just filter for customer deposit account, it will give me, now I'm doing it for all time, right? And there might be some stuff dated in the future here. So that's why it wouldn't tie out to the balance sheet. So let's just run it through 12/31/2026, I think is what my demo file is. 38,872.50. I look at the balance sheet, 38,872.50. Great. But this is running it for all time for every transaction that's ever hit this account, right? And what we want to do is we want to run it for just what is adding to that balance. Again, I'm going to run it for all time. I'm going to filter it, not just for customer deposit account, but I'm also going to filter it for cleared status of no. So I want to say, okay, which ones of these are on my balance sheet that have not been cleared yet? Okay. And when I go to my balance sheet and I run this for all time, and I look at my deposit account, 27,060, this report, well, let's see why it doesn't tie out. 27,060 for all time balance sheet, customer deposits. I, of course, going to have to figure out why. So as of, it's probably something dated way in the future. 131, everything matters, dates matter, 2027. See if that ties out. 27, no. Why is it not tied out? So we have 25,000. There's the 30. I'm going to have to figure out why. Of course, I did this earlier and it worked out just fine. But I'm going to have to figure out why these two don't balance out. My guess is it's something hitting the balance sheet account that is not tied through the item. So I will figure that out. Okay, it's got me stumped for a second here. So one of the things that we want to do, so I created my invoice. I have this amount. I saved it, right? Here's this invoice in here. Now I can go back to my customer, to my estimates, pull up that estimate that we had, and I can create an invoice for the remaining amount, okay, and put it to the end of January now, because I'm putting it in the proper period. We're getting revenue at the proper period. What did I just do? Man, I feel like this demo file is really working me over right now. Okay, let's try it. Go slower. Okay, here's our estimate. Estimate. Create an invoice. Create an invoice for the remaining amount. There we go, and we hit save. All right. Now, I'm going to go in and reconcile this account, right? So we talked about customer deposits. It needs to be reconciled. Always reconcile it to 0. So when I come in to reconcile this account, I can sort by, right, who the payee is, who the job is. And I see my remodel for 12,600. And then I see on this side my 2 remodels for 12,600. This is why. This is what's throwing it off, is this bill is being put to customer deposits. So let me Let me just move this out of here because this is not the correct way to do this, right? Why would we put a bill to customer deposits? This is great because it allowed me to catch it, but that's why it was off. So I come in here, I reconcile these off because it's offsetting, right? I say we put in $12,600, we remove $12,600 from this account. I can say reconcile now. What's left when I go to reconcile again is that those ones that are just not reconciled, right? So it'll only leave me with the couple that are not reconciled in there. And then when I look at my balance sheet, $27,500, and I look at that custom transaction detail, I'm left with just the 2 transactions that add up to that amount. Okay, so this is a more proper way to do customer deposits. All right, I know I went through really fast. I want to get you guys out of here on time though. So let me come back in here, just so you know what's coming up in courses. I got to take that off. So we have some work in process coming up, some Webgility courses coming up, really cool. Even if you don't have an e-commerce store, still watch these videos because, or these webinars, because you can use the technology that's available to do some neat stuff with inventory. All right, guys, that's all I got for you. Thanks so much for your time today. We'll see you next week.